The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday night here in Asia. I hope you guys are doing good. Monday morning in the U.S. Let's take a look immediately at the U.S. dollar. And this is the situation we talked about that would be a possible bounce point here, 97 on the dollar. This is our daily unfair lows here. Now, again, you want to see things really get the heck away from these inflection points when they come down into them or come up into them. And if you look at this, the dollar's looking a little heavy. Some of the other things that we look at are just kind of continuing to trail. We had that divergence on a long term really that continues to somewhat happen here. So any breaks below 97, especially a close on the daily, which is going to be pretty, confirming as far as the breakdown goes, that's going to have to be looked at very seriously. And on the weekly, we've got a little bit farther to go down before maximum support is reached on the dollar. That's about 95.47 on the June contract. So keep that in mind. We may not bounce and stay above this number on the daily. And the reason I'm starting out talking about the dollar this morning is because a lot of commodities will be affected. A lot of different things will have to kind of readjust based on dollar-denominated issues if we start breaking down a little bit on the dollar. So just kind of keep your eye on that. If you're trading other currencies, if you're trading the golds and the silvers of the world, the soybeans, the coffees, the cocoa, it's not a bad barometer to really pay attention to here. All right, so let's take a look at a couple of things that are obviously related to the dollar. Let's just go right into gold. Now, this is an interesting situation because, we have some automated systems that rely off the dailies primarily. They do take quite a few different time frames into consideration. For instance, we've got on our automated systems, 240-minute confirmations, stop outs. We've got 60-minute momentum plays that actually enact around some of these daily inflection points. And our weeklies, which are kind of Custer's last stance in this case on gold, we had a little bit of a DMZ on our weekly and daily between 1171.72 up into 1182. So on Friday, we had a little bit of a pullback. On the weekend, Sunday night, we started edging up. And then what happened today already, I guess, would be when you guys were just in the wee hours of the morning, we were kind of compressing against, this is our 240-minute view, we were kind of compressing up into this 82 area. And that really was, everybody's got a cover situation as we compressed up into it between the 240s and the dailies. So the top of that DMZ, 1182, the bottom, 1171, and we just had a little bit of a covering action popping back up our head back above that 1182, 1183 area. So, we hope we get a daily close above here. That'd be relatively positive for gold, and we could have, a little bit more of a leg up here. Gold's really non-directional right now. I mean, just keep your stops in. Anything can happen with this product, as you know, and I've seen this product, as you have, if you've been trading for a while, go up or down $50 in a matter of 10 minutes sometimes. So just anything can happen. Don't walk away from the screen without stops in. That's obviously something that's related to the dollar in normal circumstances. And stepping back and looking at it with the dollar strength, and I'm going to go back to our weekly here. This is our long-term view on gold. It's really been astoundingly strong relative to the dollar, repricing itself to stronger dollars over the last, 6 months, 8 months. So let's take a quick look at silver. Here we go. Yeah, this was something that for a long time we were like, the mantra was we got to get back above 1660, have a close on the daily above to look at it from a kind of get back in the fair auction breakout type situation on the north side. But we also talked about, the next buy point coming down into the 1558-59 area was the ripe opportunity from a support side. So the breakout 1660 to some degree, and the support side 1559. And we really were in no man's land for a little while. I didn't feel comfortable shorting it, actually. It was obviously the weaker of the two, but as we have come into this 1559 area, we've got a little bit of a bounce going here. Here's our daily situation. We've got a orange bar attempting to appear, which means possibly new demand area down below on the intermediate on silver, and that would be something to really pay attention to, because we could at least gather some steam down here, at least rattle around in a fair auction, and that's the situation on silver. So what do you do now with it? I think you've got a good ripe opportunity. We've hit that, and let's see what we hit on Friday. We hit a low of 1555, so we got right in that neighborhood with a little bit of noise, 1558, 59. And right now, you may have a little bit of a bounce here, but the good news is you can put your stops and orient those stops below 1559 based on your appetite for risk. And remember, the longer term inflection points always are going to have some degree of noise. You've got to kind of factor in with those inflection points for support and resistance and breakout situations, because remember, the long term takes precedence over the intermediate, over the short term, and then we've got to really have more of a pinpointed accuracy type information. The smaller time frames you trade on, the 60 minutes, the 30 minutes, those are things that you're looking for, that pinpoint accuracy on those inflection points. The longer term which is obviously got to give yourself a little bit of room on those. Let's take a look at November beans. We're going to actually bring on a good friend of mine from a grain elevator in the eastern part of the state towards the end of the show today, and we're going to talk about these November beans and these December corn and December wheat situations. We're also going to talk about some old crop beans, some old crop corn and wheat while he's on the show. He's got a lot to say. He's always kind of in the thick of the fundamentals. We pretty much strictly talk about technicals on this show, but just to kind of give a little bit of a different slant on things, we're going to have him on 942.5. Still, that's where I'm looking at the breakout on the downside on November beans. I like the way this is acting. We've talked about this before. $8 a bushel may be in order. He may come on and say they're going to 10, but technically, I feel like we could, get some downside action here on these products, and that's the way I'm looking at some of the grains. All right, staying in the theme of the dollar-related instruments here, we need to talk about. This is, again, we talked about getting the close below 107.02 on the euro. Hasn't happened yet. Demantis was on the show hoping and praying that the euro get juiced on the downside again, and we talked about you got to have the close below that 107 again to step on the gas. That didn't happen. We're right in the middle of the fair auction on the daily, and we also talked about we could run all the way up into 110.52, and that would be something that would be, in my opinion, a really great battle point to pick on the short side. But we talked about not getting heavy on the bottom here, and if we started getting back in the fair auction up top, save yourself some money. You can always get back in below 107.02, but there's no sense in holding the short. You can feel not the smartest guy in the room if this thing goes all the way up into 110.52, and you could have kind of started enacting your shorts again there. Remember, this is the gift that keeps on giving, folks. This is the weekly on the euro. Doesn't have to go to par, but we've got some really good indications. The lower highs, the profiles that appear above price action on the way down, those are very bearish overtones, and we're going to stick with our guns on that. So we've got 110 and 111 neighborhood up top on the daily for highs and weekly for lows, and I'm hoping we get up there. Now we don't have a lot of leverage in this. The long-term view on this obviously is bearish, but we're a relatively stingy group, and we want to use those inflection points to try to save some money, pick your battles at the right time, and not be in the market constantly if you don't have to be. Here's Japanese yen. This is my favorite trade on the books all the time. When we get towards support, you buy it. That's it. I mean, that's about as simple as you can be. You block out the short side on this, And I fully believe this thing could get into the 140s. I mean, that's my long-term view on it. But we got down into 118.76 this morning, and what that was our inflection point. Guess what? 118.77 we hit, and now we have rallied 70 or 80 pips off of that level in the last. Let's see, what is this? I mean, that's about to, for argument's sake, that's to the tick. But we've made those moves. What's this? Last 8 hours. Nice strong move in the yen, and that's what you want to see. You want to see prices get directly away from those inflection points when they're hit, and that's exactly what this thing is doing. We're going to go back to the Canadian dollar just to stay on currencies for a little bit here. I was a big fan. If you watch this show, we caught a little bit of a bid around this 120.60 area on the Canadian dollar, and the reason we were looking at this that way is because when we got below, we talked about if we start, doing a flush below this 120.27, you're in no man's land and in a hole in the marketplace down to that 120.60 area. Well, that literally hit within. What was that? A 3-day move, over 400 pips down. Actually, it was more than that. Let me see. High. 570 pips in 3 days. So that's kind of why when we get into those gaps in the marketplace where we don't have a lot of leverage, there's not a lot to hang on to. Prices are going to move fast in those holes, generally speaking. But when we get down into that weekly unfair high, that's kind of what we wanted to do there. And I'm sorry to be a Monday morning quarterback about this, but it was a good lesson. We kind of walked you through real time on that. But as we look forward, what do you do? Stock, this profile that appeared well above, as we were right here, and we had this profile appear. We always talk about this. Profiles appearing above price action, that's a relatively bearish sign. And as they appear below price action, that's also a bullish sign. When we had this happen, it was almost a foregone conclusion that we might go back and retest these lows. Now, again, what's going to happen now? We want to look and drill down into some shorter time frames and just kind of figure out what's going on here. This is, the 240 has regulated again this trade down. We haven't broken stride since we started this flush movement. We had a flush and went back and retested. So, this is another kind of 101 primer. You break down below the inflection points and you go back and retest, form support, now resistance, and boom. So right now we're going to go to break. We're going to come back and we're going to finish this discussion on the Canadian dollar and move into a couple of other stocks that have had earnings and will have earnings. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Let's take a look at the summary of the Canadian dollars. We were trying to review it when we left the first break. 121.77. That's where I'm looking at just kind of getting out of the trade, trying to leverage this thing on down, and we may revisit that 120.60 area and even lower. Pay attention to that because this product's not wanting to get away from those inflection points. Okay. All right. So let's take a look at a couple of things we want to review before we get going. And wow. Oh, yes, let's take a look at the S&Ps. But first, let's take a look at the Asian situation. This really even astounds me. We've talked about, the way this was kind of gathering steam, and you might have to chase it. That was on the latest breakout around 3,600. And right now we have talked about this. We've kind of done a double in the last 6 months here on the Shanghai. That's just incredible every time. And the thing doesn't slow down. I mean, Joey talked about this when he was on the show. This is something you don't stand in the way of it. These things can just go nuts straight up for a while, and Shanghai is just kind of pouring out the truth there. The DAX, again, we talked about this, but a relatively bearish situation. And we talked about this profile appearing above price action. I think that was on Wednesday, and we got some points out of that. But as we look at this, weekly, we're still in the middle of a fair auction. On the 240s, we talked about this looking heavy. These are what stops are for, folks. If you're going to play this game and try to, have these things puncture through and make new lows, you got to be willing to say uncle at some point on the upside. And the DAX, as you know, if you trade this for a while, this thing can just move significantly. So this was more of this is a great I mean, if you're trading this on 240 levels and you're trading it light, then you've obviously got a chance to stay in the trade. Maybe this is your leverage point up top that you got to worry about. But all of our automated systems, this is the way they're constructed on the stop side. They have a technical stop and they have a monetary stop. And that technical stop is based on percentage of the profile itself. Now, the monetary stop is kind of an uncle point to where you don't want to let things get away from you. So in this case, let's just do the math here. 11, 7, 11 on the 240s, up top 12, 1, 2, 7. So I'm just going to do quick math on that. That is, somebody may correct me, is that 416 points. That's a lot of points on the DAX to have a big, especially on a short term, to have a fair auction that wide. So we may set our technical stop at, let's just say, 20% of the box. So if we go into the box that far, our technical stop may be, 20% for 80 points. Our monetary stop may be set at 1%. So what would that be? That would be 117 points. So our monetary stop might get hit before the technical stop or vice versa, but we like to have those kind of insurance plans in as far as, just things getting away from you. So this is a really good example of that. Let's see here. He's talking about QE. Yeah, it's the answer to wealth. That's a long conversation. Here we go. All right, so let's take a look at the Nikkei, because the Nikkei, we had really talked about some areas between 2175 and 19770. Let's call it 20,000. This is another index, in my opinion, to be bought. The devaluation of the end is a dream for these stocks in the Nikkei. So, we've got a pretty wide profile that's appeared now on the dailies. Not a lot of leverage here. I think this thing could rattle around for a little while. We could move back a little bit, but 20,000 is going to be the big leverage point, and we have hit a low of 19,935, so I'm going to call that satisfied. Next stop up, 2215. I'd love to see it pull back into 19,770. That would be a really nice maximum support area in the long term for the Nikkei, but that hasn't happened yet. But right now, I think this is a no trade right now. You don't have any inflection points to really grab onto, if you know what I mean. All right, so on the S&Ps, we've talked about staying away from this because of our Brett situation that was a little mixed up, wasn't as strong as some of the other global indices. And I want you to look at this. We have plowed through recent all-time highs, but we haven't gone through it with conviction. And we're going to talk about that a little bit when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's take a look at crude oil. We're going to go back to the S&Ps in just a second. I had a question about crude oil. I just want to try to cover this. Remember, we had that close above this 56.14 area on the weekly. This is the June contract. We've got an automated system running on crude oil. And, you know, I love this. I mean, I love the way this is acting. I love that 56.14 area. I love these weekly closes staying above there. I like the breakout. I like the churning action. And I think we're going to have another leg up in this. We've had some decent little moves in this, you know, instrument since we've started rattling around it there. We reached highs actually of 58.82. These are really cool moves in crude oil. I mean, we were at 46 3 or 4 weeks ago. These are, you know, what is that? 12, 46. This is over a 25% move in crude oil in 3 weeks. So now it was over 25% move in crude oil in 3 weeks. Now we're consolidating, and we're consolidating within a fair auction on the daily and above that weekly. And these are, you know, not things to write home about, but these are continuation patterns is what they are. The good news is, again, for that long-term move up that we're looking for here, 56.14 stops below. These are pretty easy marks to hit on the logic structure behind going long crude right now. And I love every bearish note that comes out about this particular instrument. Love it. We were trying to get technically oriented, my buddy at the grain elevator in TFNN, but they cannot seem to shake hands and make this work. So this might not happen today. So let's take a look at some of the ETFs that we normally look at, and this is one I'm falling in love again on the short side here, the XLF, and let me see where we're at with this. Yeah, we should be good. What's going on with the charts here? Why is the XLF not coming up? Okay, I tell you what. If this doesn't come in about 2 seconds, we're gonna. Okay, let's try something else. Okay, let's take a look at Apple. The ETFs must be having some issues here. Okay, so it sounds like they're setting them up right now. Let's take a look at Apple. Pre-market, again, we've got some earnings out on this. This is no mystery to anybody on the planet right now. There's some earnings coming out after the close here, 132.38. Let me just confirm that. Okay. Apple. After the market close, yes. So we've got some movement in a pre-market. And as we look at Apple, now we're trading above weekly unfair highs. So we talked about, in fact, if you go to our scanner and you pull up the scanner, this is kind of our mocked up demo test version that we're using right now. And you go into the S&P 500. I'm going to pull this up, click it. I'm going to go into Apple. If you look at the note on Apple, trend is favorable to longs and has been enforced for 8 weeks with primary long-term support at 130.76. So what that was before is breakouts have to be bought above 130.76. So as we look at the paragraphs in the long-term view, now we've shifted. Now we've said, guess what? Long-term support's at 130.76 on the weekly. This will, I can't read right now. I'm not focusing on my words here. This will signify new long-term support and resistance levels may appear along with stops and new dialogue. All right, so now you're looking this is a north move. Now we always talk about trying to stay away from trading an instrument before earnings announcements. I'm still going to stick by this, but before this earnings announcements, there's going to be some people covering this on the long side and the short side. There's going to be some volatility. So if you're in there trading Apple right now, I'd look at it as day trading opportunities until those earnings come out. All right, so I think we've got McLean Bryce on from the eastern part of North Carolina. Are you on, McLean?
Yeah. Can you hear me?
Yeah, man. How are you today?
Oh, good. How you doing, Logan? Long time no see.
Yeah, it's nice that you're in a good mood today. That's great.
Yeah. Just been preparing my my hot pepper tea that we talked about, and yeah.
How's that treating you?
Great. I love it. Except I got a little bit on my fingers, and I got it in my eye here a minute ago, so I'm kind of tearing up a little bit. Part of that's just from being able to talk to you again, though.
Well, I of course love to see you cry, so that's kind of like I get a bonus right now.
Yeah,
so
yeah.
And it's kind of the way it works. Hey, look, man, what is going on with these, new crop beans and corn and wheat? What's the fundamental things that you're hearing, and where do you think these things are headed?
Well, to tell you the truth, John, I think that's really more your job is to tell me where the markets are heading. I'm a merchandiser, so I'm trying to service my customers regardless of if markets go up or down. Of course, we always hope they go up, but I'm sure as you've been talking to your viewers and telling them, I'm sure for the last 4, 5, 6 months at least, the seems like the volatility has just gone out of the grain futures markets.
Right.
The beans have probably traded in maybe I don't know. Well, as well as I do, $1, maybe $1.50 range in the last 6 months, which is, I can remember days where beans would move $1.50 in 2 days.
Right.
Corn, wheat. Wheat's been a little bit more volatile, too, unfortunately, on the downside. But grain prices are just at historic lows. I think a lot of it has to do with we just had great crops. I mean, it's there's so many factors that go into price discovery in any industry, but with food crops, I mean, it's really supply and demand is just the main thing, and the supply is just really high right now. We had a great crop last year, a great growing season. South America came in really well, and they're planting more right now as we speak in the Midwest. If we have another nice summer, a decent growing year, it's just going to be a lot of product there. So there's not a lot of people, running up and down the streets waving a bunch of money trying to buy it because it's just so much of it there. Right. A good and bad thing for from your side of it, trading opportunities. I mean, I don't know. You would know way better than me, but I mean, I would say, selling premium maybe in the options market would have been a great strategy over the last 6 months. But of course, over the last 5 years, you'd have lost a lot of money trying to do that.
Right. Well, let's. I appreciate those comments. Let's talk about corn, because I think that's something that a lot of folks is low volatility in it right now. It's a little beans have scared the pants off people trying to trade them, like you said, over the past couple of years. Corn is just seemingly drifting. It's down past $4 now in the December contract. Correct. I mean, what could really cause the volatility to come in? What are the factors? Is it some kind of where does the weather really? What part of the corn crop does, and I'm talking months, time spans here. Yep. What time of the year does the weather really, cause a volatility scare? And when you get past a certain level and there's no more weather scare, or if there is not a weather scare, what could happen to this corn crop and the prices on the December corn?
Really just over the summer and typically in late June through July. I mean, there's got to be some rain in there sometime. Right. And if there's not, you might see a little bit of panicking, but then all of a sudden it starts raining and then the panic disappears. We did have a pretty much almost a historical drought a couple of summers ago, and I don't know if you remember that, but prices kind of went through the roof. A big crop was planted, acreage was there, but the weather did not cooperate, and it was just a terrible drought, and prices spiked. I think that was the year that people thought we were going to be where we are today, but it just, because of the drought, it took another year for us to get where we are right now. At these low prices. The corn crop is by far the largest in terms of volume, acreage. Corn yields a lot more than soybeans.
Right.
3 or 4 times as much per acre out in the Midwest. Go ahead.
I got a question after what you just said. What, a lot of people out there, farmers, obviously how hard they work and the risks they're taking on, basically. And what can you expect if you're a farmer, because you deal with this on a day-to-day basis? What do they really expect at corn? Corn's at $4 basically, drifting lower. What do they expect to make per acre, all things considered, net? What do they hope to make out on an acre of corn, generally speaking?
Well, a couple $100, ideally, right, which is hard to do. Where I am in eastern North Carolina, I mean, the average bushels per acre is somewhere, say 100, maybe 120. Midwest, you could be 200. So obviously, their production is probably twice as much as what we get off an acre of corn. So they're making twice as much. However, with rail freight and things like that, they're not making as much bottom line as the guys around here are, but they're making twice as much yield, so they make up for it like that. The main thing is that a lot of people plant corn, and that's what they've done for generations. And there's also a lot of a lot of corporate farms out in the Midwest, and they just grow a lot of corn. And with prices where they have been for the last year and where they are right now, a lot of the talk is, and it's probably going to happen, is that people are going to shift some of that corn acreage to soybeans, which you know where this is going. Right. The expectation is bean prices are going to continue to drop because there's going to be more production, and you might see a little bit of a bump in corn, but probably not until a year from now, if that scenario plays out.
Well, I'm not pegging you to this, but I remember last time I was back in the States, well, maybe the time before that, you were talking about, the bean crop might be so large, and if the weather is just average weather, we could see beans easily back in the 850 a bushel area. Are you still thinking that's
certainly that is certainly a possibility, although it seems like they're as low as they can can go, but that's obviously not the case. I mean, I think a lot of people, and I'm sure I know that a lot of people thought that at the bean harvest this last November that beans were going down to, some people even said $7 or $8, and we ended up buying a lot of beans in the $9 level because people were kind of scared that it was going to drop down to $7 or $8. But as typically happens, what everybody thought to be the case did not happen, and right around bean harvest, they made kind of a rally. Now, in the past 5 or 6 years, as I said, it rallied $1. 2 years ago, that would have been 2 days worth of trading. This year, it took 6 weeks for it to do that, and it kind of stayed up in the 10-ish range, low 10s, and kind of went sideways. And now we're kind of back down into the mid $9 range. It's just been kind of boring, a boring year from my perspective, and I would think from a trading perspective, again, unless you were, selling premium, I guess is the only way that I could see. And I'm not really a trader, but that's the only thing. Either way, selling, covered puts or calls, you couldn't go wrong because the market just hasn't moved. You whether you bought or sold the futures, you probably were going to unwind that position at pretty damn close to where you got in it at, and then you would have kept the premium on the options. That's the only trade I see in the grain markets in the last 8 months, and that trend very well could continue.
Well, I'll tell you what. That's great insight, but I'm not gonna, you actually, and you know what I'm talking about. You called a top and a really good play around 10.50 a bushel. I don't think it was November beans. What was it? January beans. This was back.
Yeah, may have been March beans.
Yeah, we came in. Yeah, we came in significantly off of that call, and we made some good points off of that. So it hadn't been that boring. You've been pretty right about this so far.
Well, that was a big. I think there was a big report was coming out, and it just felt like things were pretty top heavy right then. But again, that was, if you remember correctly, what was that? Maybe a 50-cent move. Which yes,
I think it was a lot bigger than that. I think we went from 10.50 down into like 9.50 ultimately. Okay,
and then maybe it was a dollar move. But like I say, in recent years, that's been that could happen over a 2-day period, and that was probably the biggest move we've had in this season.
Great. Well, listen, man, I hear the music. They're going to go to break. I appreciate you coming on, and I'll talk to you soon.
Yeah, great. Thanks, John.
All right. Yep.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back. Here's a picture of the NASDAQ. This is our long-term 4437, that breakout above, and obviously a little bit stronger than the S&P's, turned a lot stronger than the S&P. Here's that pullback to those numbers down below. Take a shot, long-term trend up. But on the S&Ps, we weren't a big fan. And I'm gonna go in here. This is really, really cool how Demantis has started working his magic. And we don't have the. He's adding things right now. Sorry, this is kind of a work in progress. But as we look at these, like the S&P 500, the dials here, we click on them. We see a lot of green, but we see a lot of red too. These odometers, speedometers, breadth indicators up top, this daily just seems to barely be positive. And, the other ones are kind of flip-flopping around. That's why we haven't had, and I'm going to the S&Ps now, we haven't had collectively as a company a lot of faith that this is the, low-risk trade to be in. Even though we pulled back right to these inflection points, it provided a trading opportunity that, we haven't really gung-ho back in long here. The breadth of the market, the way we look at it, is not that strong. Therefore, in my opinion, why would you step in large, get long? This thing may key reverse really quick. And, a market that's kind of teetering, trying to stay positive, the amount of stocks above profiles were relative to the amount of stocks trading below profiles, and then everybody runs for the door at the same time. This could get ugly really quick, and I just don't. And again, we've got an automated system that has been long S&Ps for a while, but I just don't see the don't see the hell bent for leather, rush to get into these things by anybody. And the stocks themselves, the internals, are just not, boring the truth out on that. So that's the way I'm looking at that one. Let's take a look at a couple other stocks I want to go over today. One of them is IBM. I just wanted to follow up with this. It's not, we got above, this was, let me just kind of go back in time here. This was the, okay to be long, not okay to be short situation. I'm not a big fan of going long this, but we really hadn't had any clear cut on the long-term daily. 160.55 was kind of the okay point to get short again on the long term. But as we've ramped up here and kind of used some dailies to move up here, what do you do with this? I am still not a fan of going long this. So on this particular stock, I get a lot of emails about IBM because it's something that I've kind of been a fan of being short. We've caught some good moves off of this thing, but when we break stride and start clearing some technical barriers, then you've got to sit tight and you've got to wait for some more profiles to appear. And right now, there's just nothing up here. I mean, this thing, can it go higher? Yes, it can. Can the market go higher? Can the market drag this up? Absolutely. So we have to now wait to try to pick some more battles on the short side with IBM. And that's just the way it works. There's a lot of people short this stock right now, by the way. So, if you got stopped out of this on the short side, probably, you probably got a good batting average on this stock for the year being short, but you're not alone. So don't go to hell in a handbasket here. Here we go. Let's take a look at McDonald's. This is something that has had a lot of volatility. I wanted to pull it up today because it's just literally been all over the place the past 4 days. So we've gone from way down here in the basement as a weak stock in a strong market to now breaking stride and being above this 97, 95, 98, and convincingly getting north here, but now getting into these weekly inflection points. I don't think this is a short at this stage. You've got to kind of wait until we get back below some of those boards we just talked about. Guys, you've been great. Plain Bryce, thank you for coming on today. We're still listening. And Steve Rhodes is next. You guys have a great trading day.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.